Hi, this is James Zhang. I'm a national director for Old Capital, and today we're going to be talking about DFW multifamily. Um, in the context of Q4 2020, just sort of giving a recap, but then also talking about starting at the national level, making its way down to DFW. Then we're going to talk about sales, A, B, and C broken out, and then what's on the market today. So, my background, born and raised in Houston, went to school at UT Austin, and I've been in DFW since 2006. I was an underwriter for GE Capital for 8 years, underwriting everything office, industrial, retail, multifamily. In the last 6 years, have been really focused on originating multifamily loans throughout the nation, doing about 900 million across 135 properties and 14,000 units. And then I've also invested in close to 28, 29 properties in DFW, Austin, and San Antonio. All right, so let's start at a national level. So 2020 was down probably 15, 20% year over year from 2019. And that really was a function of Q2 and Q3, as you can see here, was down by, almost half in both of those quarters. Q1 and Q4 were essentially on par with 2019, but Q2 and Q3, just with the lockdown, everything was down. So year over year, it's saying it's over, multifamily sales were down close to 28%. And then when you look at by month, it really was a combination of um, March, April, May down significantly due to COVID. And then December 2020 was actually the largest month ever, I guess, on record, as the number of transactions was coming in. And we saw that on our end, just in terms of the number of deals that we're trying to get done in December before year end that went under contract in Q3. And I like this chart a lot. So this is showing how much volume was done throughout the nation. And the number one market in all of 2020 for multifamily, guess what, was DFW. So DFW, $10 billion, $10.3 billion. Next, the major ones above 5 million, LA, Denver, Atlanta, DC, and New York. So New York still had 9.5 billion. So I think some of the majors like San Francisco, LA, New York have always been there in the top. But for DFW to be right there on top of everybody, Phoenix, Atlanta, and Denver, I think that shows sort of the reemergence of DFW as one of the top markets. Austin, Houston, close to three to 4 billion in both those markets, and San Antonio with 1.8 billion. All right, so let's look at rental collections across the markets, right? Because I want to point out Dallas, but then sort of show some of the outliers, right? So Dallas is sitting right in the middle at about 95% on their collections. New York, Las Vegas, Seattle on the far right end are having the most trouble. Tampa, Salt Lake City are actually on the far left in terms of collection. So Dallas right in the middle, about 95%. In terms of demand and supply, right? So you always want to look at supply, how much new stuff is coming on the market. Dallas tops again in 2020 for new supply. The absorption wasn't all the way there, so that's why you're seeing some softening on the Class A space in Dallas. Houston right behind it with the second number of most units built. Absorption is about half there. And then Atlanta, the absorption is actually higher than the supply right there. So that's probably one of the few markets that you saw the absorption. And in Phoenix, here, the absorption was higher than the supply on a national basis. All right, so that's gonna lead into rent growth, right? Because if your supply is too high and there's too many units on the market, then you're not gonna be able to push rents. But we could see that if we go back to this chart, Phoenix, the absorption was higher than the supply, and then their rent growth was the biggest in all of 2020. So 4.5% in Phoenix, even throughout COVID. Let's see where Dallas is sitting at about 0.4%. So that's what we saw. People were not really able to push rents on new leases. We saw some pushing of rents on renewals, but it was $15, $20 on these leases, and it wasn't much. So less than 1% in Dallas. All right, here's a good snapshot of the DFW multifamily market. Some of the things in terms of unemployment, in 2019 it was 2.4, jumped up to 6, and then back down to about 5.6 is the prediction from Bricadia. Population about 7.8 million, employment about half of that, and then the median income is about 72,000. And so what they saw price per unit in 2020 as a whole was 149,000 per unit, and then cap rates were down about 20 basis points to about 5% on average. So we're going to dig into the details a little bit more for Q4, but this gives you a snapshot of sort of the size of the DFW market. So this comes out of Yardi, and Yardi is not as they sort of break it up into sort of class A, B, and C, and then they have the loan data, which we use a lot of the times, but then they don't necessarily have, because Texas is a non-disclosure state, they don't have the actual sales price. But what we've done is sort of used averages to give you a feel for what these deals traded at. And so we're going to break it down by class. So we're starting right at the top, right? So this is the new stuff coming out of the ground, A plus stuff. Average rents on these deals were about 1,500 to 2,000 per month. Average dollar per square foot was about 198, and then average price per unit was about 190. Most of these deals, the size was about $60 million. And so you can see where these new construction class A deals are, right? So they're along freeways, up in Allen, McKinney, Frisco, even Louisville, around the airport, along 121, downtown Dallas, downtown Fort Worth. And so most of these newer product, these are going to be high rents, right? So $1,500 rents to $2,000 rents, class A amenities. The financing on these is going to be Freddie Mac conventional, life insurance, Fannie Mae. Those are going to be your top guys on the financing side. So let's go through here. I mean, you can see, sales price, they're estimating these, but anywhere from 50 to 60, $70 million. Most of these guys are either very large syndicators like Madera or REITs. So people like Cortland or Fairfield Residential, the other syndicators that you can see in here. So SPI, which is Mike Becker, closed the deal last year. Ashcroft, which is Joe Fairless, Madera. Let's see. I'm trying to see if there's any other Barvin Group. Those are all syndicators, right? But most of the guys buying these deals are larger REITs who are coming in with their either private equity checks, or they're raising money from the public markets to buy these deals. All right, so if you go down one more step, so class A minus, B plus, so this is probably, think about like stuff built in the 2000s. Average rent's about 1,200 to 1,600. It's usually Freddie Mac conventional, Fannie Mae. Deal size is a little bit smaller, about $50 million. Average price per unit is down a little bit, 173. This is probably one of my favorite classes to invest in. Sort of, you can get into A minus, B plus deals. This has 9-foot ceilings. This is washer and dryer connections in every unit. And, some of these have garages. So you can see on this deal up in Frisco, it has garages, but some of them just have covered parking. So you see some of these deals are a little bit more infill, right? Because if you think about Dallas and you go out in rings, these are a little bit older deals than some of the newer stuff. So you see some of the stuff in Richardson, you see some of the stuff in Irving, and sort of North Fort Worth is where a lot of these deals have traded. So similar group of people buying here, right? So you see Madera's buying, Cortland's buying, down here, Exponential Property Group, they're buying. So those are syndicators. They might have, they may raise funds to buy these deals. The size of the deals is a little bit lower. But most starting out syndicators are not buying, A minus, B plus deals. This is sort of after you've done 10, 15, 20 deals, you're moving up to this size deal. All right, so now let's go down to sort of B minus. This is probably where we do a majority of our deals in terms of financing at Old Capital. Rents are about 900 to 1,300. Freddie Mac, Fannie Mae, Average deal size is about 23 million. Average price per unit, which is, this is probably a little low, but 108 per unit. Average per square foot is 127. So you can see these deals are a little bit closer in. They're probably along 635, along 75. So some deals in Plano, some deals in Garland, Mesquite, Duncanville, Irving, Arlington. So those are where sort of your B minus product is. So let's jump over to who's buying these deals. So I couldn't fit them all on the page here, but in terms of Conti, which is a syndicator here in Dallas, and then you've got Dark Corp, which is Darwin German and his group buying the corners. Nitya Capitals out of Houston, Urban Southwest out of Houston as well. We did a couple of these loans here, Xander Park, The Loop. We financed those with just sort of your straight Fannie Mae loans and then also bridge loans. Raj Gutner, Terrace View, that was a deal that we financed with a bridge loan over in Grand Prairie. So you see these unit counts are a little bit lower, right? So you're 150 units up to maybe 250 units. These deals are average deal size is right in that $20-25 million range. And so for this market, this is where a lot of syndicators are trying to push into, right? So they're trying to move up from, maybe they bought a C deal, they want to move up to a B deal. These deals are right in that sweet spot where I think a lot of syndicators are trying to get into. So that $20-30 million range, good rents, $900 to $1,300 rents. And then Fannie and Freddie really love these Class B properties. All right, so let's go down to sort of the final level, Class C properties. Average price is about $8 million. Average per square foot to 120. Average price per unit is about 84,000. You can see a lot of these properties were in Garland, Mesquite, sort of West Dallas, South Irving, Arlington, East Fort Worth. And so these deals are just going to be average rents was under $1,000, so 800 to 1,000. Freddie Mac SBL was prevalent, Fannie Mae, and then even recourse bank loans, because some of these deals are small enough that people are comfortable signing recourse bank loans for the flexibility. So almost all of these are individual owners or syndicators, right? So Tanga, Gomo Capital is a group out of California. Valcap, that's probably the largest deal here. That's probably the largest deal, 18 million. JARS is a syndicator out of DFW, and then some individual owners here as well. So that's sort of on the Class C side. Smaller deals, they're doing loans anywhere from 2 million to 10 million, and most of those are going to be Freddie SBL, Recourse Bank, or Fannie. And so, those are the deals that traded in 2020, the fourth quarter. And I want to talk about some of the deals that are on the market right now and sort of give you sort of whisper price and sort of how deals are looking. So the Forestburg, this is a Class A minus deal up in sort of North Dallas, Louisville. Whisper price is about 150 a unit there. Broadway is a Class B deal in Garland, 125 per unit there. And then Villa Creek, this is a Class C deal in Dallas. Sort of in a C deal, but it'd probably be location, 119 per unit. So if you haven't watched the What's the Deal videos, I spend 15-20 minutes with the listing brokers going through deals like this that are on the market. So you can check those out. Some of the recent closings in Q4 up in Abilene was Rieta Ranch. This was a deal that I closed, Assumption Supplemental. Brittany Place and the Heights. This was, you saw this was JARS Partners partnered. This was a Fannie Mae loan that we closed for them. Wooded Creek, this was a Freddie conventional loan that we did. And also Bedford Creek was a Freddie conventional loan. So all those four closed in sort of November, December timeframe that we completed. So if you have any questions about those deals, happy to answer any questions about those. And then, a lot of people ask, why should we use Old Capital? Why should we work with you as a mortgage broker? I would say, it's about really giving you all the loan options, right? So you can see, depending on what type of deal you're buying, size of the deal, your loan options are going to change. And you have to understand all those nuances. And then, so we sort of provide all those, look at the deal and make sure you find the best deal, best debt for your deal. And then, throughout the deal, whether it's before the deal, during the deal, post deal support, we help you in all those facets. And then we charge the same as everybody else. So we charge 1% of the loan amount at close. So if you have any questions about your next deal, definitely reach out to me. Subscribe to this channel, like the video, share the video. That's what helps us get more people to learn more about us. And so I appreciate you watching. And if you need help with a term sheet or deal review, send me an email. I'll need T12 rent roll OM or just the investment package if you want to talk about a deal. And then to get pre-qualified, complete a personal financial statement and set up some time to talk with me via email. And I appreciate you guys watching today.